Introducing Pete Landau, Executive Director of Range Resources. Pete, thanks for joining me.
Pleasure, Andrew.
First question, post-GFC, Range has grown to hold assets in 4 countries. What was the rationale behind this?
Look, I don't think you never target a rationale in respect of aiming for countries or particular projects. I think post-GFC we realised we couldn't be solely dependent on our Puntland project. It had missed timeframes with not with us as operator, and so we realised we had to get other projects into the company. So the rationale was, at that point in time, find obviously good value projects which suited the portfolio of Range, which meant non-dilutive projects, which means low entry points, small farmings, but with high upside, meaning if they came off, obviously they'd significantly add value to the company. Now, Georgia and Texas are obviously those 2 types of examples, whereby with small entry points, Texas 1.5 million, Georgia, I think even the initial seismic event was quite small, but they've turned out to be multi-$100 million projects. So from that perspective, it's worked. Now Trinidad's a bit different. I mean, Trinidad, we have paid significant money for an asset, but we think obviously it's significantly valued without the risk that Georgia and Texas presented at that point in time. So look, never target country by country. We never say, right, we want an asset in Georgia or we want an asset in Texas. It is all opportunity driven with an aim of what's best for the company at that point in time.
Mm-hmm. Pete, on the 2nd of June, Range announced to the market that it acquired production assets in Trinidad. Could you tell us a little bit about that asset and what investors can look forward to?
Sure. I mean, look, Trinidad for us is obviously what we consider to be more than a company making asset for a number of reasons. The key thing to understand about Trinidad is the investors who had it had been feuding for at least the last 4 years, the 2 main guys. So there has not been a dollar spent on capital investment in Trinidad for over 5 years. And if you look at it on even on our P1, P2 reserves, we are now only exploiting 5% of the identified reserve area. So you take that for one. So that in itself means there's a massive opportunity. When we talk about going from 600-700 barrels to 4,000 barrels a day, that is only from the identified P1, P2 areas. Doesn't talk. We then have a whole another level of 20 million of identified prospective resources. In addition to the whole 13 map seismic Herrera opportunities. Each Herrera can be anywhere from 20 to 120 million barrels in place. So Trinidad, the beauty of Trinidad is you've got producing assets, basically, which I think you can work on just on with the royalty tax regime. I think we can work on, for every 1,000 barrels, work on $12 million net free cash flow to Range on 1,000 barrels development. So you've got that. You've then got the Herrera opportunity. You've then got, in addition, you've got the P1, P2 plus the prospective resources. So all in, I think the number right now stands as we have 250 identified drillable targets across the board, separate structures, P1, P2, prospective Herrera. That's just, so we could spend the next 4 years drilling out those 250 targets, which is obviously what we intend to do. More importantly, with Trinidad, we control our own destinies. We own all the rig infrastructure. So we do not rely on any third parties to do anything with respect to the drilling program. So I own workshop, I own casing, I own rig, everything. So the beauty is everything we do in the next 2 years with Trinidad, we already control in-house. So when we do talk about rolling out a drilling program, we aren't relying on anyone else to do that work for us. And give people an idea, look, we currently employ over 150 people. I think the ramp-up's going to go to about 300 people. So we are also going to be a significant employer and contributor to the local community in southern Trinidad. So I think Trinidad, I think we bought it with both cash and equity for around 60 million. Was already valued at about, as part of the analysts have valued at about 140, and that's without attributing anything to the Herrera opportunity or anything like that. So we think Trinidad, as sort of like call it, whether you want to call it a company maker or the real underpin of Range, we think Trinidad is going to be an amazing asset for us.
Pete, in September 2009, Range acquired a 25% interest in the Smith No. 1 well on the North Chapman Ranch project. Could you tell us a little bit about the success of that project?
Yeah, I mean, look, keep it brief on this one. I mean, the Texas asset was luck and timing. I mean, it was Mark Patterson, currently technical consultant to Range. He's already involved in the project. Basically, someone pulled out because they couldn't follow through with their checks for this well, the Smith well. So we were an opportunity to write a cheque for about $1.5 million to basically participate 25% in that well. It was a known target, as in its sister well had blown out through to high pressure, so we knew that the structure was in place. We knew there was going to be oil and gas there. Obviously, size-wise, we didn't know. The Hallett Hill Formation, which it targets, had never been tested before. So the Smith opportunity basically has led to the development of the North Chapman field, which I think we've seen, the P1 through to P3, 250 BCF and 8 mil in liquids. So for Range, that opportunity is translated into a very significant return for us. The key feature with the Smith well is we had the second one, which obviously was also a success, and now we've got the Albrick well, which is going to be drilled around September. Each of the two wells currently combined are doing anywhere from 8 to 10 MCF a day and 7 to 800 million barrels. On those wells, remember, with our gas, because there's a high condensate level, we get about $7 to $7.50 an M with our gas as opposed to the Henry Hub. I think if people want to try and understand what it means financially to Range, it's a 15 to 20 well field. Current prices, each well per annum net to Range is around anywhere from $2 to $3 million. So call it $2.5 million. That's what it can mean to Range. Or it does on the two wells to date. The third well will, where it's targeted, which is on the sort of like the southwestern flank of the field, means that if it comes in, and we're very confident it will come in, all of the current P3 or most of the current P3 resources, which I think make up about 50% of the resource on North Chapman, would probably be converted to P1 and P2. Obviously, attraction there are a lot of mid-tier developers and producers in the US that will buy P1, P2 reserves to bank them. So if Albrick comes in, North Chapman becomes a very, very bankable project to someone to come in and take it out as a 20 to 25 year development play. So it is a very significant asset. Obviously, again, we're in the right time, right place, and it came in for us. I think realistically our strategy is get the Albrick number one drilled, potentially a fourth well. So Albrick will be September, October. The fourth well probably be January, February. And then after that, we believe it's the asset will be taken out by a mid-tier player.
Okay. Pete, when you've framed Range previously, you've framed it in terms of a production assets with increasing production underpinning the value of the company, whilst at the same time having exposure to two call options, referring to the assets in Puntland, Somalia and the Republic of Georgia. What makes those two call options assets so attractive, and what can we expect in the near future?
Sure. I mean, I think the attraction is not so much. Well, the attraction obviously is you've got the exposure to Georgia and Puntland, but the real attraction with Range as a stock is the fact that your current market cap, you could have Texas and Trinidad and have the evaluation of your current market cap with those two assets. So number one is you're not relying to an extent on those two assets coming in. So that's sort of like your first attraction. Second attraction is we think obviously Georgia in the first instance, there's a high chance it will come in. What you've got in Georgia is spudding commencing next week, first week of July. You've got obviously this is 120 to 130 million barrel in place target, so is the second well. So you've got a back-to-back program that is basically, it's not an if or a when, it does commence in the first week of July. The wellhead's been, is in place, the equipment's on site, it's simply being put together. So you are drilling that target in the first week of July, probably about a 40-45 day TD target zone. We had the helium survey done on it. You can have your skeptics out there, but the helium surveys have been used by every Russian major in Siberia for the last 10 years. It's got about a 90% track record in terms of identifying, when used in conjunction with seismic, in terms of producing in oil-bearing zones. Mm-hmm. And obviously that came in positive with both of our first two drill targets. So there is a high level of confidence with our targets that we'll definitely have a commercial discovery. So Georgia, if you're going to look at it, I think we're anyone conservatively 30 to 5% recoverable of 120 mil target. And we've got 40% of those targets. So, potentially having exposure to 20 million producing barrels in Georgia, where full infrastructure is in place, significant pipeline infrastructure, obviously is strategically placed with the Black Sea. We think the upside with Georgia right now is significant. And as I said, with the well being spudded next week, obviously it's only going to increase activity in the stock leading into TD on the Georgian well. Puntland's a bit of a different one. Puntland is significantly bigger. The first two wells targeted by Africa Oil as operator are both a billion barrel in place, which would make them, two of the largest onshore wells drilled this year. The issue with Puntland has always been the tyranny of time and delay. We are getting very close, obviously, to finally pushing the button to greenlight drilling of the first well. Where it's at right now is there is the drilling contractor has been there is a letter of intent in place. I would suggest if investors are looking for the next key development on where the Puntland assets are, because people never question the geological sort of like upside of Puntland. It's all, well, when are you going to drill a well? And I think the next big announcement potentially is going to be mid-July, which would involve obviously signing up of the rig, a drilling timetable and everything like that. That is what we're targeting. Obviously some sceptics out there after 4 years might suggest otherwise, but obviously with Africa Oil as our operator, we're and knowing what we know, we think it is very achievable that we could have everything in place ready to go by mid-July, which would mean a spud date September, probably towards the end of September, maybe October. Leading into that first well. Remember, Puntland has not had a well drilled, I think, since 1992. So even on a world scale, it is a very, very significant well that will be drilled, and that'll be a back-to-back. So 2 billion barrel in-place wells drilled back-to-back. So timelines there. Let's look for an announcement in July, which will hopefully give everyone guidance as to the timing of the spud. But we're confident that the team Africa Oil's put together, we'll get this. We'll get at least the first well spudded September, October.
Pete, Range has expanded from an oil and gas explorer to include production assets. Can you tell us a little bit about the team involved that's helped you manage this process? Yeah,
I mean, look, so if you're looking at the 4 countries we operate in, Puntland, obviously we're not operator, but Africa Oil operator, they're part of the Landau group. Yep. You've got seasoned professionals who have been there, done that in both difficult environments and non-difficult environments, but they know what they're doing. Obviously, we're very comfortable with Africa Oil as operator. We have our technical consultant, Mark Patterson, who assists in reviewing what they do. But at the end of the day, we always backed Africa Oil to do this, both on a technical and logistical front. Similarly, Texas, we're not operator. Mark Patterson does have significant involvement in it. But again, you've got private operators who are seasoned, who have basically done in Texas for decades and proven to date with the 2 wells that have been drilled. So Texas and basically Puntland are on autopilot to an extent, so we're comfortable there. You then get to Trinidad. Now Trinidad, the whole operational team has basically moved over with the asset. So we've lost no one in that process. The key thing, they've been crying out to develop this asset for a number of years, but had no capital. We've already given them the capital they need. So now it's just rolling out the basically that. Initially there'll be a 9-well plan, but look, you are looking even over the next 12 months. You're going to look at over 30 wells being drilled. To give you an idea, I mean, some of these wells will be drilled, capped and on production within a week. They're only 200 feet deep. And they can come online at 100 barrels a day, so they have paybacks of 4 to 6 weeks. So that's part of the reason why we like the Trinidad asset so much, is you've got these shallower wells that come on stream straight away, and then you've got the bigger, deeper targets. But the technical team with Walter as the CIO down there, and Neil as the sort of like the petroleum geologist, as well as Mark Patterson and Greg Smith putting their input in. Again, we haven't had to reinvent the wheel to make Trinidad work. It already came with the project. Really, all we had to do was, write the check to make sure the development can continue. And when, we've just taken a whole lot of analysts and brokers down there, and they couldn't believe the infrastructure that is on there in place. As I said, the rigs, the workshops, everything is in place to make this happen. So we don't really have to do anything other than write the check, which is what we're doing. Georgia's a little bit different. I mean, Georgia came with, historically, from a geological and an exploration perspective, it came with all the guys who were involved in the Soviet times with these 2 blocks. So there's sort of like the intellectual property of what was on those blocks. They spent at least 3 years processing whole lot of data digitising, and that came from the Soviet era. We obviously then did the seismic. Now, unlike Trinidad, we do need to bring in, obviously, First Drill as the operator in terms of the drilling of the target and Deco. And we've got RPS as an independent consultant, so there are more consultants involved in Georgia. But again, the key thing is geologically and from a local point of view, we've had a local Georgian outfit involved with this project since Strait have been involved for the last 5 years. And now really, so it's up to us in working with the drilling contractor to manage this process. So look, people think potentially we're overstretched, but when you look at it, we don't operate 2 of the assets. Trinidad, again, other than is effectively still on autopilot, so we think it is still very, very manageable.
Mm-hmm. Hey, what chances do you think investors will see a capital raising in the near future?
Well, I mean, you can define capital raising, define near, define future. I mean, we're, at these levels with a crappy market, clearly we're not going to go and blow Range's capital structure out. We don't have to. We're fully funded to do what we want to do in Trinidad, Texas, and Georgia at this point in time, and even Somalia to an extent in Puntland. So we do, though, we have had a number of offers to provide both pure debt, convertible and equity to the company. Now, if we do want to institutionalise Range, because we are a predominantly retail stock, we are going to have to bring in some institutions at some point in time. It's not going to be at these levels, and we aren't talking, hundreds of millions of dollars. We're not talking $50 million. I mean, given our market cap, we can do what we want to do with very little dilution, and obviously dilution would be for the better. If we're going to be starting to cover institutionally by some institutional brokers in the UK, you do want to give some institutions some stinky stock. Now, it's not going to be big levels, but right now, we're not going to do it right now because, we're like the rest of the market at a low we don't want to be. So in the immediate future, no, but it's not to say we're not going to do something moving forward if market conditions pick up. If they don't pick up, we'll probably stay where we are, potentially look at a bit of debt because we can absorb a debt, but at this point in time, we have a lot of people who want to be involved, but we don't do anything silly based on what our expectations are from a shareholder base. I think we've demonstrated to a point in time that we manage it pretty well, and I think we'll manage it pretty well moving forward.
Mm-hmm. Pete, what are the other foreseeable challenges from your perspective looking into the future?
Well, I mean, look, if you didn't know what the challenges were, you wouldn't be running your business properly. I mean, in each of the environments, the challenges are, okay, in Puntland, Somalia, it's making sure we do whatever we can to assist Africa Oil and the Puntland government to get a well drilled. Now, there's a lot of challenges in that, but we know what they are, and we spend the resources to make sure we can help them. Georgia is a little bit different. I mean, Georgia, everything is in place to drill these 2 wells. So now the challenge is making sure it comes in on budget and on time. So the challenge in Georgia is called timing and cost. Texas, again, we don't really have too much control over it. So Texas, it's just literally, obviously, assisting where we can, although it's not that significant because we're not operating. We're only a 20-25% holder. So Texas, again, we're sort of like, we're not in control of our own destiny. We write, well, it's almost self-funding now with the revenue we get. So Texas is more or less on autopilot. So then that leaves Trinidad in terms of the challenge in Trinidad is, again, given the team's already in place, is making sure they get all the support they need to roll out this program that's going to see production increase from 600-700 barrels up to 4,000. Right now, my gut tells me, given the capabilities of what we've got, that's again simply just writing out a check and making sure as long as we do the right thing by the local communities, by the people already there, making sure they're fully incentivised to stay with the company, which obviously we're putting in place. It doesn't have to involve a major reassessment of what we do to manage that challenge. So for Trinidad, as I said, the key there is making sure everyone's incentivised. We do the right thing by the government and the local communities, of which Walter has been doing already. So we don't have to radically change the way we operate down there. It's already being done now. So again, the challenge there is just giving everyone the support to make sure we get what we can done.